Hey traders, hopefully you're having a great start of the week. We're going to go over our global macro update, which is going over many different asset classes, many different assets, and trying to come to the conclusion of our global investors have higher risk tolerance or lower risk tolerance. And another way of putting it is it a risk on or a risk off environment? And that's the goal of this global macro update. We're just trying to understand if it's a risk on or off environment. And in short, just by looking at it at the start of the video, it seems like it's more of a risk on situation. So the US dollar, Japanese yen is going down. We're seeing the S&P 500 move up. We're seeing other indexes like the NASDAQ, Russell 2000 hold supports, move to the upside, and we're also seeing currencies like GBP and the Australian dollar move up against safe havens like the US dollar and the Japanese yen. So overall, it does look like we are in a risk on environment. So that allows things like stock markets to go up, like we can see right here. I do think that Bitcoin could get a little bit of a bump up as well, although we do have some pretty heavy resistance. And then we'll also talk about the metals that, in my opinion, look like they are really looking like they're going to move to the upside at a pretty aggressive pace. So first thing we're going to look at is the S&P 500. So this is the futures contracts. If there's no gaps, I just personally like to look at charts that have no gaps. It's a lot more fluid. It's a lot more natural in my personal view. So we were talking about this descending wedge here, and we did form a lower high from the initial high that we had after the breakout of the 61.8 fib level, and then we made a lower high with lots of wicks. Let's just close all that out. We see lots of wicks at the top here, indicating lots of sell pressure coming into the market. And this descending wedge, the key level of supply that we expect the price to hit, is back up to those highs. So from a potential descending zone, so let's draw it yet again. So initially it was a descending zone like that, sort of, which now turned, in my opinion, to a horizontal zone. So we went from a descending zone, we broke up, and now we are targeting the previous resistance within the consolidation right here, which is around 3150-ish, and I think that could be the next possible zone. So it's not too hard of an ask to get from here to the major level of resistance, and that would set up a situation in which having exposure and risk on assets would be a positive thing in your portfolio. So we're going to jump into a smaller time frame here, take out the overall structure, and we can see it's not from this high, but it's from the second high. We saw a descending zone here, and we're getting our push up to hit our key level of resistance right around here at around 3150, 3160. That's going to be the main level of resistance, which is in confluence with the size of the descending wedge opening, which is where we're normally going to target for these price action patterns that are continuation patterns to the upside. So when we are getting on the 2-hour time frame, we can see overall very well respected chart with a series of lower lows that are held by a descending support and a more descending resistance that is squeezing the price closer to the apex of the pattern. We got to break to the upside, breaking the key level of confluence for the sellers. We validated that previous support and resistance yet again as a new level of support, and then now we are making our impulsive move to the upside, making higher highs and higher lows, breaking resistances, holding supports, making an upward momentum move to our supply area, which is on 3160. So that's the current situation for the S&P. I think it will continue until we hit that zone, and then it's just a matter of if we're going to break it or reject off like we saw 1, 2, 3 times. So right now, my personal view is this key zone is going to be the main level of supply, and I think we could hit this area for the price to get from where it currently is to that zone. So in terms of the next couple days, I'm viewing the market as a potential risk on environment where global investors are seeking to get a higher ROI, seeking for more speculative investments like putting their capital within the S&P 500. It's a lot more speculative than, for example, bonds, which yield a very, very little ROI compared to these indexes right here. So overall, I think we're going to keep on getting a continuation to the upside. Obviously, there is positive news for the earnings. I think that's not going to last an extended period of time. But in terms of the current hopium opportunist kind of mentality, where we're not really at a point where a lot of people think that there's going to be a massive sell-off. We're still in the consolidation. I think that people right now are still in hope that the economic recovery will be quick, fast, V-shaped recovery, all that stuff. I don't think that it's really sunk in and that second wave hasn't really hit, and people are still thinking that we're still going to get a push to the upside. So overall, I think that it's in a risk-on environment for the next couple days here until it hits that key level of resistance, just looking at the SPX. When we are looking at other indexes, we see that the NASDAQ broke above the 99.60 zone, which was a major level within the chart, and we made a move to the upside. Also, we do see higher lows getting held by an ascending support, which was able to hold the price here as well. We did get a nice head and shoulders pattern here, but it did get invalidated, so this pattern is no longer valid because the price has now broken above the right shoulder. Once that happens, the price action pattern is no longer valid, so this head and shoulders is no longer a head and shoulders in my view. Unless we see the candle close below the open on this current 4-hour candle, that could be a possibility. But if we see it continue to hold that at that zone, I'm not going to view this as a head and shoulders, and I'm going to view this as a continuation push to the upside where it held a strong level of support. We got a possible confluence zone, previous support, new level of support and confluence of the ascending zones. So overall, NASDAQ is recovering from the potential sell-off that could have happened if we saw a continuation below this ascending support. But we didn't, so we're going to look at the market in a more bullish view. Russell 2000, this is a head and shoulders as well, potentially if it breaks the 1370 zone. It does not look like we have the sell pressure to crack that area. So if we do break this zone right around here, that is going to be the head and shoulders invalidation where you get a break of the right shoulder, similar to what we have in the NASDAQ. So buyers are definitely coming into the market, pushing prices up, trying to get in on this appreciating index or indexes here. And we can see within the VIX, the volatility index, it is dropping below the support of around $30.50. And if we do see a drop off and a decrease in volatility, that's going to give me more confirmation that the S&P is going to chug along higher, slowly, little by little. Yes, we will have some strong pushes, but when volatility is decreasing, the S&P is slowly chugging up, slowly climbing this staircase to higher highs and higher lows. And then when you see massive jumps in the volatility, obviously that's when the price of the S&P takes an elevator straight down and you see massive spikes in volatility. So if you're seeing a drop of under $30 within the volatility index for the S&P, I think that this will continue to see higher highs and higher lows, breaking resistances, holding supports, going slowly climbing up to that 3160 mark that we're talking about. So overall, it's looking more like a risk-on sentiment as of now, in my personal view. Quick look at the global indexes: Japan, the FTSE 100, the ASX, which is Australia, and then the TS or the DAX, which is Germany. All are in a very similar situation like yesterday we talked about. We do see, I think we can probably shift this a little bit, so it kind of looks like that. So it's in line with the other indexes that we are looking at, but overall we do see that there's just consolidation, right? We're not breaking the support yet, which is a main level within the structure, but we are not really making any higher highs. So we can see within, for example, the FTSE 100, we're forming a descending triangle with a series of lower highs we can see right here. And yes, you could argue this is a symmetrical triangle, but I value this a little bit more as a descending triangle pattern. If it does break the resistance and breaks the series of lower highs and makes a new high, let's just go to the 6-hour. So if it breaks this descending zone and starts to form a higher high, once it breaks, especially above the third validation of this zone right here, if it's able to break above that, that's going to be definitely a risk on indicator, just by looking at some of these indexes here in pretty important levels. And if we're able to make a higher high, obviously that's just extremely bullish, and safe haven currencies will definitely be something to be looking to short, and risk on currencies will be something to be looking to long, as well as stocks overall will be looking great. I don't know about gold and silver. I'm pretty bullish on gold and silver as of right now due to the technicals and the fundamentals of currency proliferation, printing a shit ton of currency. We've already talked about the money supply in the United States alone increasing by like 13% or something in maybe it was 11. It's double-digit percent increases in a single quarter. That's unbelievable. And it happens, and it's still continuing to print and print and print. So I think gold and silver are definitely going to be places to be looking for potential longs in my personal view. CPI numbers aren't really increasing yet, but people understand that printing money is definitely going to give more value to gold and silver because they can't be printed. They can only be mined, which takes up a lot of energy. Makes sense. So that's going to be the global indexes. We've already talked about the US base indexes, and then now we're going to go on to a little bit of some US bonds as well as the US dollar currency index. Quick look at the COVID deaths. We did pass the 500,000 mark at 505,000. Obviously, that's not great. We're not really seeing any slowdown at all, but this is just to keep everyone updated on the numbers, basically. So then quickly looking at the US bonds here, we did see a bit of a sharp drop off, especially on the 5-year. It really looks like it's trying to break that support, and it does look like it is breaking that support. So if the US bond yields are dropping, that means people are going into bonds. There needs to be really no real yield for people to jump in. There doesn't need to be any incentive for people to jump into bonds. Whereas if the yield of the bonds are increasing, it means that there needs to be a greater yield to incentivize global investors to invest capital in US bonds. Whereas if it's dropping, there needs to be less incentive because there's so many people piling in. So right now, we're dropping in the 5-year, so more and more people are shifting their capital into bonds, which is a little bit more of a risk-off sentiment. If people are moving capital into bonds, they're worried, they're fearful, and they want a safe place to store their capital. So that's not great, and it's kind of countering the S&P breakout, but obviously it's not going to be absolutely perfect. But we're not seeing a massive sell-off, and when we are looking at the 10-year, it's not nearly as bad, where we're actually seeing an ascending zone, I guess you could say. But as of right now, I'd say it's a little too early to tell. But we do see a support here on the 10-year bonds for the yield, but the 5-year is looking like it is potentially going to fall off a little bit of a cliff here. We'll see. We will keep everyone updated. So next thing we're going to discuss is going to be the US dollar index. This is mainly comprised of the euro. It's like 60% euro, so this is like an inverse euro USD chart to some degree. I'm getting a little bit of coffee, and then we'll jump into the US dollar index. So we have in potential either ascending wedge, which would definitely be a continuation pattern to the downside. If the US dollar drops and loses value, gold and silver, in my opinion, are going to be really, really good places to be. Also, crypto is a really good place to be if the US dollar drops as well. So that's going to be my point of view. If the US dollar continues its momentum to the downside after this symmetrical triangle squeeze, we've got a massive impulse push to the downside, corrective move, and we could see that continuation and the momentum shift back to the bearish side. But this is the big thing. If it holds, and we'll just get rid of this right now, and it becomes a ascending triangle pattern, and it breaks the 90, let's say 97.80 range, and holds as a new level of support, this could be a ascending triangle pattern breaking to the upside. This, in my opinion, is a decent base. If it does break the key level of resistance and hold it for a support, that could be confirmation that there's a little bit more worry in the overall market. Now, it would be great if this all came together at once. If the S&P moved up to its key resistance, this moved down, and then the S&P fell, and then the US dollar goes up again. It's very negatively correlated. So that would be the ideal situation, but I don't know if we'll get that. So in this current market right now, I think that the US dollar is still going to go down in value because it's a risk-on environment, and people aren't going to be keeping their capital in cash if the speculative assets or instruments are performing better, or investors think that they're going to perform better than cash or bonds that have very little yield. So that's going to be the big play here, and we'll see how it goes. Let's just get our ascending zone again. So that's going to be the two situations for this squeeze. I think the higher probability play will be a continuation to the downside, but hey, we'll let the price action speak for itself in that department. So that's going to be my analysis of the DXY. I'm not seeing a whole lot right now. We are in the 4 hours, so I think the next play will be to wait until this ascending wedge or ascending triangle break either to the upside, breaking 97.80, or breaking the ascending support. I'd like to see one more validation of this ascending support before I can use it as a clear breakout zone. But that's going to be my overall analysis of the US dollar currency index. Now for the fun part, we're going to look at gold, silver, and the gold and silver ratio. I'm extremely bullish on gold and silver right now. It's looking really, really solid. I'd personally really like to see a little bit of a pullback. Gold is seeing a little bit of a pullback, so then I can get some better risk-reward entries in here. But I'm definitely looking at, well, I already have some exposure on silver in terms of the trades. Obviously, investments is a completely different bucket. But silver looks better than gold, in my personal opinion, for a potential long. And let's discuss why, looking at the gold and silver ratio. Christian says, damn, back at it again. So we do this every single weekday on around, let's say, 10 to 2 in the afternoon PST. So Pacific Standard Time, you can kind of change the time wherever you live in. But let's just go right back to the gold and silver chart. All right, so we can see this ascending wedge broke down below the 108, and then we had that massive, massive sell-off. This was from May 14th to May 19th. Let's see what silver did from May 14th to May 19th. Zoom out. May 14th to May 19th. These are the types of moves you're wanting to hold in gold. Gold shoots exponentially higher, or sorry, silver shoots exponentially higher than gold when there is a metals bull market. And I think we're reaching that at this point where money printing is causing people to put capital in places that are going to save the value of their cash in the long run. So I think that gold and silver definitely are looking solid, and we can see this is what we're looking for, right? So then when we're looking at the gold and silver ratio, what we want to be looking for is these moves. So obviously, very similar structure, very similar potential outcome. Obviously, it's not going to be exactly the same. We're going to even go back to the weekly chart and look at what we can currently see within this structure. Very, very, let's just go like this. Very good potential reversal pattern where we get a long doji here, and then this looks like it's a great reversal, right? You get our up candle, you get our doji, and then if this closes red, that's going to be a potential another sell-off here coming in the gold and silver ratio. I'm going to quickly draw in the ascending wedge that we've been talking about for a while, just to know where potential levels of support and resistance are. That's going to be the support zone, and then the resistance zone is going to come from here, right around there. So we can see the price is currently right at the key level of support, which is totally fine because we knew that we were going to have some reaction to this zone, and now we're going to come back down and attempt to break this zone yet again. I think it will break, but obviously only time will tell. We've got a nice little mid-range zone here as well. So that's going to be our zone that we'd like to see break. And if it does break, major next zone is going to be like 87, 89, high 80s, which is going to be an extremely large move for silver. So the gold and silver ratio is already indicating that silver is going to be a really good opportunity. That's what I get from the gold and silver ratio. Be in silver. It's yelling to me to be in silver. So I am listening. We got a strong push to the upside. On the 4-hour chart, we got a huge bullish engulfing candle, really validating that there are buyers in the market looking to enter silver. I did have a stop entry order with the previous structure right around here. Really solid risk reward. Even if it doesn't pull back, my personal stop loss is going to be just below this low at around 1766, somewhere around there. And then the take profit is going to be the opening of the symmetrical triangle in line with key levels of confluence, looking at the previous historic time frame. So when we go back to the daily, where does this massive rejection go to? Around 1960, just under $20, in line with the size of the symmetrical triangle opening. So if I go like this, you can see 1960. Key level of rejection on the previous time frame. So that is going to be where my potential take profit is going to be for the silver trade. I'd ideally really like to see some consolidation here. I would love to see that. So if we are using an example, look at this consolidation that we had, really validating the previous resistance as a new level of support, and then we get an absolute blast off. So that would be, in my opinion, the perfect situation to find ourselves in. We got a stop loss below the previous low on the 1 hour time frame, giving enough space that the market can move within its normal volatility, and you're not going to get stopped out. You're also looking for that nice take profit, in my opinion, around $19.50, $19.60. You could push it up a little bit more, but that's going to be the next level of supply that I'm currently looking at for silver to get to. And in terms of entries, obviously, the lower, the better. I'm still looking to scale in here. I do have some exposure within that initial bullish candle push up, but I am looking for the validation of a new level of support. Once that validation comes into the market, then I will really enter with my full size. So I don't want to do it just yet. I do have that exposure that I initially entered on the feeler trade, but I do not want to go full in, all in, because I think that we could get a better entry at around like 1812, 1811 maybe. That would be really good to see, but that's going to be what I'm going to be looking for in terms of silver. So overall, looking really bullish. I like the overall structure of it from large time frame to small. In my opinion, it is really screaming at me like it's going to continue to the upside. So I'm going to trade the market as such. So we can't look at just silver. We do have to talk about gold as well. Obviously, they are going to be put in the same basket of anti-fiats. When there's money printing, gold and silver are going to be, in my opinion, put into the same basket of assets that global investors are going to be looking for. Now we're going to be looking at gold because gold is equally as important. We got a strong push to the upside, huge bullish engulfing candle, and now we're getting a little pullback. On the pullback, it does look like we are holding the previous resistance right here as a new level of support pretty well. So right around there. We'll get rid of this guy. Ideally, you could see a nice retest to this zone here, 1774. That would be a really nice retest in a solid potential entry zone, in my personal opinion, as long as it's validated. But like I said before, it's not just looking at the price action of gold against the US dollar and silver against the US dollar. We're looking at the comparison. What looks stronger, gold or silver, right? You can enter both. You're diversifying to some degree. They'll probably move in the same direction. But what I like to look at is which one will be moving at a faster rate, because it will provide a better ROI. It will provide a better risk reward in my point of view. There's going to be potentially less drawdown. All positive things to look for in a trade. So when I see gold, it looks pretty good. It looks like it could definitely go towards that 1800 key level, which is right around there, which is going to be the main level of supply that I currently see for gold. And I think that's in confluence with the size of the opening. The size of the opening might be get to like 1812, 1815. 1810, somewhere around there. So that's going to be the take profit for the actual size of the symmetrical triangle. But we do have to take into account, when we are looking at the daily, this 1800 round number is not only a psychological level, but it's also a major level when looking at 2011 to 2012, 2013, when we had multiple rejections exactly at this $1,800 level. So we know that there's sellers in this market. So that's going to be the overall trade for gold. Like I said, again, I'm not looking for gold so much. I'm looking at silver. So I'd like to see it come down a little bit more, around $18.10, $18.05, somewhere around there. That would be awesome. We're at around 1820. Obviously, you don't need to penny pinch. From where we currently are to where I'd like to see it, you're getting around, let's say, a quarter of a unit of risk more in the risk reward. So instead of a 2.5 risk reward, you're getting, let's say, a 2.7 or 3 risk reward, which is, substantially better, but you don't want to penny pinch looking for the absolute perfect entry every single time, because you might not get it. So I already have a feeler trade in. I already have exposure in the market, but I'd like to add on to my size at a better risk reward parameter. So that's my current outlook for silver. I'm bullish on silver, I'm bullish on gold, but I'm more bullish on silver because of the gold and silver ratio breaking to the downside. So that's going to be my overall analysis. I think this is going to be the big one for the next couple days here. I do have some potential trades in the FX market here that I'm looking at, or that I'm currently in, but this is going to be what I'm going to be keeping track of for the next little bit, especially because it just looks awesome. If we get something like this, I'm going to be a pretty happy camper, let's say. So that's the overall analysis within the global macro space. Quickly just looking at the S&P again, we did see a pretty big jump here soon after we talked about it. So let's go back to the S&P. Strong push up that we're seeing within the overall markets here for the S&P. Look at that bullish move here. From 30.82 to where it currently is now within the same 2-hour candle. We're almost 1% up. So definitely a risk-on environment right now within the overall financial space, which is you're looking to long crypto, you're looking to long stocks, you're looking to long risk on assets, even like in the currencies, exotic pairs, minor pairs that have a higher interest rate. So you're able to have a positive carry cost, allowing you to have cash flow coming in while you see your trade appreciate. So it's a double positive if you are going to go that route. Obviously, it's not for everyone, but there's things that you can do to create cash flow while just being in a trade. Some pretty interesting stuff. So that's about it for the global macro update. We'll see where it goes in terms of silver and gold. Those are, like I said, are going to be the main things I'm going to be looking for. We'll see if it drops down a little bit lower. I'd really like to see silver retest the $17.9, $18 zone for a new level of support. I would be super happy if that is the case. So that is the global macro update. I'll open it up to anyone who does have questions, and then we're going to get into the cryptocurrency part of it. So we're going to talk about BTC. We're going to talk a little bit about the potential that Bitcoin has with the S&P really running here. All right, a little bit of coffee. Going to see if we have any questions in the thing. Christian, silver shooting for the stars. I completely agree. I definitely am thinking that silver will appreciate here. But hey, who knows? That's just a probability. If you take this trade 100 times, you know, I'm like 99.9999% sure that you will make money. There are always times when market conditions change. Your edge might be a little less profitable in some months compared to others. It's pretty hard to be consistent like year over year without change in from summer to winter, because summer is usually a little bit less volatile, a little bit less movement in price action compared to at the beginning of the year, kind of the end of the year, where you see more volatility pick up. So we'll see how it goes. Definitely would like to see that retest, but you know, if we don't get it, that's okay. I still have exposure, but it's not going to be absolutely perfect in my eyes until we get that retest. Then it's going to be like, this is fucking awesome. But every potential trade could fail. It could be the best technicals in the world. You could have every level of confluence lineup. You could have multiple validations. Everything can be looking absolutely perfect, and the trade could still fail. And that's why we use stop losses. That's why we use the same position sizing for every single trade. That's why we try to eliminate as many variables so we have a fixed approach to trading in the markets, right? So then you can have a dependable, repeatable system that you can tweak in order to try to squeeze out a little bit more profit, reduce risk a little bit more, and really just make more money at the end of the day. And that's going to be a lifelong process that takes a long time, basically. So now we're going to get from the realm of global macro, looking at multiple assets, just into BTC. So this is currently the 1 hour time frame. We're going to jump into a larger time frame. Let's jump into first the daily. So we're grinding right at the support zone here, where we have a confluence where a horizontal zone meets an ascending zone. So there's going to be a decent amount of buy volume at around the 9K zone. And it does look like we are basing a little bit. We're making higher lows on the smaller time frame. Although this rejection on June 27th was a little bit worrying for the bulls because we did break below the ascending zone, but on the daily chart, we did close at that level with a type B candle closure. So on the daily chart, still super well respected as this ascending zone continues to hold the price, making higher lows. We do have a descending zone, but this main level of support is the one that we're really paying attention to. So now we have a good understanding of what's happening on the daily chart. On the 6-hour chart, we see that ascending zone here hold the price. We did get a little bit of a descending zone squeezing the price towards the apex. This was a nice small symmetrical triangle where we have a major support creating higher lows, and you have a small minor descending zone that is squeezing the price. We did break to the upside. We're still consolidating, not really breaking out of the market structure. So this is the market structure right here at around 9,200. And we can probably delete this right here. So the market structure is currently at 9,200. If it breaks the $9,200 zone, I think we could see a move up because we've already broken the descending zone, and then we might slowly climb up to a potential level of resistance, 94.50, 95, somewhere around there that we talked about last time. Because the overall S&P is moving up, we gotta understand that it's currently a risk-on environment. Global investors are seeking to speculate, seeking to get a higher ROI by putting their capital in riskier speculative investments, and I would classify Bitcoin as one of them. So let's now go on to a smaller time frame. We've already talked about that squeeze, and let's actually look at this on the smaller time frame. All right, so let's take a picture of this. So this is that major support that we're looking at. Yes, we do see the price extend out beyond the zone and close below the support zone, but like we talked about on the daily chart, that is validated and held on the daily, so it's still a valid support level in my eyes. So we're holding the support level really well, so we know that there's buyers in this zone. We then proceeded to make a series of lower highs that respected a descending trend line. So we already know that the support zone is here. We have a first touch, which is the anchor point. We have our second touch, third touch, fourth touch, really valid zone. And then not only do we pop out of it, but we're now testing this same support zone yet again as a valid level of support in confluence with this now descending support, which was previous resistance, new level of support, as well as this horizontal zone. So there's a lot of demand around the 9K zone right around here. So unless the S&P has a huge dump, I think that the highest probable situation is for BTC to form another wave to the upside, where we're getting the support held, 1, 2, 3, support held. We did see a pretty big rejection right here. Initially, that was going to be a potential breakout, and we were hoping to see this support from the resistance right here support the price, but it did not. It instantly rejected. It came back down, so that is not a valid hold of the support zone, so that is an invalidation of a new support zone. So we're going to classify this as the resistance right here. So what we need to see in order for the confirmation of a potential move towards the upside would be a higher high validated by the 1 hour time frame closing above this key zone, and then you're looking for a pullback, which is an exhaustion phase validating the previous resistance after the impulsive move towards the upside. So when you get a breakout, you're going to get an impulse move, a corrective move, and then an impulsive move again. So what we're looking for is right now, I view the market as somewhat of an ascending triangle zone. You could also look at it just as a consolidation zone because this is a current level of support. So right now we're in a consolidation near major level of demand, and the major level of resistance is still pretty high up here. So in terms of overall probabilities of where the price is going to go, I think it makes more sense for the buyers to break the resistance, test as new level of support, and then trend up towards the $9,450, $9,500 zone for the next lower high within the larger time frame squeeze that we can see. right here. So we're near the support. I think the highest probable situation is to get up to around $9,450, $9,500, test its descending zone yet again, and then we might go deeper into the squeeze when we get a big sharp dump down. We don't exactly know, but in terms of the next few days, in terms of this week, I think we could see some continuation moves to the upside in confluence with the S&P for BTC. And then we're going to quickly look at the correlation between BTC and the S&P 500, which is the traditional markets for gauging risk on, risk off sentiment. So this is going to be the 180-day correlation between BTC and the S&P 500. And it's not just looking at a chart, it's an actual mathematical formula. Look up Pearson's coefficient of correlation, or Pearson's correlation of coefficient, one of those two, but that is the formula that derives the actual correlation in terms of positive or negative. And right now we can see this is a long-term chart looking at a 180-day correlation. Obviously, the longer the time frame that you're looking at is going to be more valid because obviously that just makes more sense. So this is the 180-day correlation. We can see if we actually zoom into the smaller time frames, we're, for one, near the highest point of positive correlation between the S&P and BTC, and now we're coming back up to the high of around, let's say, positive 0.20 or 20% positive correlation within BTC and the S&P 500, and it's increasing at this point. We're not really seeing that decreasing just yet. On the 90-day time frame, we actually have seen, let's just zoom all the way out here and go like this. We have seen a decrease in positive correlation, but it's still around 0.20 in positive correlation between BTC and the S&P 500, which is still a positive correlation. If you're comparing it to things like gold, BTC has either zero correlation or slightly negative. So you're seeing in the data that right now, when global investors are seeking risk, are seeking higher ROI investments and trades, they're looking at BTC. Where if they're looking at BTC in a way that would be a more risk-off asset, like gold, like the US dollar, you would see this chart, if you're comparing it to the S&P, as a negative correlation. Like if you're comparing gold to the S&P, they're negatively correlated. And we can actually look at the correlations on this chart. So let's just close this off. This is one of my favorite websites, to be honest, other than TradingView. It gives you so much data. It's great. So 180-day correlations, and we can look at, for example, things like euro dollar right here, and go all the way down like here. What's positively correlated to things like the dollar? Oops, just trying to get that right there. Oh, give me one moment. There we go. Awesome. All right. So first things first, gold is 83.83 positively correlated to the euro dollar, so dollars, which is extremely positively correlated. When you're looking at things like the Australian dollar, it's negatively correlated. British pound is negatively correlated. It makes sense, right? Russell 2000 is negatively correlated. S&P is negatively. Dow Jones is negatively. What's weird is the NASDAQ is actually positively correlated. But when you're looking at the S&P 500, it's positively correlated with the NASDAQ. So I don't know what happened there. But mainly I like to look at main indexes, currencies, and commodities like crude oil, gold, and silver, and stuff like that. I don't really look at soybeans and other future contracts, wheat, and all that stuff. But overall, great analysis for understanding correlations. Christian says, what are some ways you train yourself emotionally to be a successful trader? To be honest, that is a lot to do with just time and taking a lot of pain psychologically, so you are, to some degree, more resilient. It's really hard. Trained emotionally. I would say that one thing that's really helped is every single day, find something that you absolutely love to do and that you're really good at. When I have drawdowns, when I have difficult times in trading, I definitely feel inferior. What's a good way to put it? I feel like I'm not doing a good job. I feel useless and inadequate and kind of an idiot. And it's not, yeah, it's like not right to say it or whatever, but that's how I feel. I just feel like I'm not doing a good job when I'm in a drawdown, and it sucks. I used to just my way of dealing with that before was just I need to backtest more. I need to be better by putting in more time, putting in more sweat equity, and putting in every ounce of effort that I possibly can to be better. And that's just by simulation trades and by backtesting and by knowing your setups and by being confident in your abilities. That's how I used to perceive me being upset at myself and disappointed and frustrated. At that point, you do get really good at understanding your own setups, and I think that's really helpful. But one thing I've learned to actually help with psychology is not by pushing more. Like, my problem is if I were in a drawdown, if I'm getting upset at myself, I was not very nice to myself. Like, I would try to push myself too hard to a point where it'd be like immense amount of pressure, and I feel like I'm like a bubble of just frustration, anger, disappointment, and it's not healthy. So what I turn to is, instead of being so mean to myself and saying, why the fuck aren't you doing better? Work harder, work harder, work harder. Instead of going that route, I said, okay, I gotta be nicer to myself. This is way too difficult for me to just be constantly pissed off at myself. So what I do now is be nice to myself, and that helped tremendously in terms of psychology. I absolutely love mountain biking. It is mountain biking and snowboarding. I absolutely love it. So what I do is every day during the lull time, which is between the New York session and Australia/Asian session, what I do is go for a bike ride, and I'll think about trading, but also life in a way that kind of takes myself a step back and gives me more perspective. When you're trying to backtest, go every single day, you kind of lose sight of the larger picture at hand. And what I found useful is doing something you're really good at. It could be, I don't like video games. I don't play them. I think they're a complete waste of time. But if you're really good at like video games or whatever it is, do that for like an hour. Like, so you gain the confidence. You're like, holy shit, I'm a fucking beast. Like, I am really good at this. And that gives you confidence. So then when you go back to the markets and back to the charts, you have that sense of like self-worth and confidence back, where you know that you're good at something. And that helped me tremendously. Because when I was just focusing all my efforts in trading and just basically making trading the number one thing that will decide the fate of me having a good day and bad day, that was just too difficult for me. Especially because I'm a swing trader, I'll look at the hour chart, and if I have like 2-3 losing trades in a row, that's like 2 weeks potentially, or like a week and a half of trading. So that entire week and a half, I just feel like I'm a fucking idiot, and I'm so useless. And it's not right to think like that. Like, you got to be nicer to yourself, and that's, I think, one thing I've really gathered just from my own psychology, from having a diary, from just looking over trade after trade after trade after trade. I realized my TA is great for me, like it works for me, but it's just being extremely psychologically consistent, waking up every single day with the same mindset, with the same attitude, with the same goals, and doing it the same way. You don't size down because you're in a drawdown and you think that the next trade is going to be a loser. You have no fucking idea. You have no idea what the next trade is going to be. It could be a 5-to-1 risk reward. It could be anything, right? Every single trade is completely independent from the previous trade. Definitely. So bringing a new, fresh mind to the markets in each and every day is very important. So a little bit of psychology there. It's really challenging. You got to know yourself, and you got to know what your weaknesses are. Like for me, I can sit in a trade for a while. I'm very good at being patient for the right opportunity. But the most difficult thing psychologically that I have would be to get out of my own head and just be fucking nice to myself. It sounds easy, but when you're trying to get better, not everyone's like this. I don't know. Like, if I want something done, I'm pretty pushy for myself. Like, I wouldn't be a great boss because I just want everything done so quickly, and like efficiently, which is good in some sense in growing a business, yes. But if you are trying to rush trading, it's not going to work, because you can't just, find the right way and then instantly make money from the markets. You have to go through trials, tribulations. You have to know yourself. You have to go through drawdowns. You have to get to a point where you're like fucking crying because it's so difficult and you're just trying so hard, and then you come out from that and then you start being profitable again after like a month of drawdown or 2 months of drawdown, and then you'll be like, oh shit, okay, I dug myself out of that grave, and that itself gives you more confidence. So yeah, like Ray Dalio said it best, what is progression? It's failure plus reflection is progression. So you not only have to fail, which is psychologically challenging and financially if you're not able to manage your risk, but you have to also learn from it. Look back from the times that you were most painful. What did you do? What did you not do? And then you got to learn from that. And it's really not easy. Like, a lot of people go over psychology like it's just this thing that you just work on the side. But I find that psychology is the most important thing that you can work on as a trader. Yes, simulation trades is important. Yes, backtesting your strategy so you can dependably use it with confidence, that's important. But if you wake up and you're unable to wake up in a same sort of feeling, where some days you wake up and you're super frustrated, like right from the get-go, you just woke up on the wrong side of the bed, and then the next day, you're just so happy to get up and just jump into the markets. That is very disruptive. It won't breed consistency. So it takes a special kind of person. You got to be somewhat immune to the ups and downs of life when you're sitting in front of the markets. If you made like 10 grand in a month or a week or in a year, whatever your goals are, like, you shouldn't be like, oh my God, this is so fun. Like, you shouldn't be ecstatic, because, that's going to make you a little bit overconfident. And just like the contrary, if you're in a losing streak and you had a losing month or like a losing even quarter or a week or whatever, you shouldn't be extremely hard on yourself saying, oh, I should have done this, I should have done that, because there's another month. And if you put yourself down too much, that's just going to put you in a negative state for the next day, and there's no need for that. So yeah, I could talk about psychology for a very long time. I absolutely love it, but it's also extremely difficult. Yeah, so I definitely understand your frustration there. But, all you can do is learn from your mistakes, get up 101 times after failing 100. Really, as long as you're like resilient and you tell yourself, I will do whatever the fuck it takes in order to be successful. No excuses, nothing. Anything will be done in order to be like, that's kind of the mentality that you need to even potentially make it, really. It's not an easy business. It really is not an easy business. So anyways, yeah, Christian says, hell yeah, snowboarder. Yeah, I started snowboarding when I was 6. My parents are extremely avid skiers. I absolutely love living in the west coast of Canada. I'm definitely a classic BC boy for sure. I love mountain biking, snowboarding. What else could you do out here? Will Smith says, if you're going to fail, you need to fail forward. Yeah, so his quote, what was it? Fail early, fail often, fail forward. I could not agree more. Fail early. You got to fail early. When you're starting out as a trader, you got to fail early. You got to make all the mistakes early, because that's when you're paper trading, that's when you're simulation trading, when you can fail. You have the option to fail, right? It is simulated failure, which is just practice, which is what every trader needs to go through for the first little bit, in my opinion, in order to build the confidence, the skill set needed to consistently come to the markets with the same strategy time and time again, in order to have a consistent setup or certain setups that you're looking for. So that's fail early. Fail often. If you're only trading on the weekly chart, and if you're paper trading, like actually paper trading live markets, you're not going to get that many entry signals. So I'm not saying use a minute chart, but especially when you're starting out as a trader, it makes sense to look at a lot of different setups. And in order to do that, you need to go to a smaller time frame. So I'm not saying you could only go on the minute or 5 minute, 15 minute. I like to stick on the 1 hour, but when I initially started for the first year, I was on the 5 minute and 15 minute chart, and I got a lot of reps in terms of trying to find patterns, trying to identify them, and trying to trade them. So I would say fail often would be an extremely powerful tool to try to gain experience faster than a person who's only swing trading on the daily chart. You're not going to get as many entries, you're not going to get as many reps, you're not going to get as many examples as you would if you traded on the 15-minute chart. And even for that example, trading markets that are open for longer will give you more opportunities. Cryptocurrency market is open 24/7, 365. FX is 24/5. Equities is 6.5 hours a day, 5 days a week, not even if you have any holidays. So even looking into what asset you're trading can be helpful at the start, because the more reps you take, the more practice you'll have, and the better you'll better be over the long term, obviously. And then fail early, fail often, fail forward. That's the biggest one. You got to learn from your mistakes, right? That is the key to trading. You got to write down what you did right, what you did wrong, where'd you enter, where'd you exit. Take a picture of before, take a picture of the macro chart so you know what happens on the 4 hour or longer term picture, and then take a picture of what happened after. So that is going to be the best way that you're going to help yourself. Yes, you can go to different people, you can read books. Also, just on random, best book out there in terms of authors is Brett Steenbarger, Dr. Brett Steenbarger. He is a trading psychologist, works a lot with SMB Capital, which is a prop firm that trades mainly, or day trades equity. A great person to follow if you're interested in looking more into the psychology of trading. Also, the classic one is Mark Douglas. I know everyone's heard of Trading in the Zone, but he does have a lot of content out there other than Trading in the Zone that allows you to gain a little bit more perspective as to what the actual game of probabilities truly is. You can see like, oh wow, this has high probabilities of moving upwards, but you have no actual idea if it will. You have no idea how it's going to get there. You have very little clue as to if it'll actually happen or not. You just have a probability that it's either going to hit the take profit faster than the stop loss. Maybe, let's say 56% of the time, 55% of the time, and your risk reward on average is like 2.5, 2 to 1 or whatever that is. Like, out of the sample size of, let's say, 10 trades, 20 trades, 50 trades, you have zero idea of which ones will work or not. Every single one, every single trade you take, you think will be the right trade. TA will be perfect, FA will be perfect, you've done your due diligence, you've done your homework, you're set up to have a perfect trade. In my view, silver is similar to that right now. If it pulls back, validates it with a nice hammer candle, with a wick to the downside and the candle closing green, that's like, holy shit, I'm going to fucking enter this. But I'm not going to enter more just because I think it's a better setup than gold. Like, I'm not going to say, well, I'm going to risk 3% on silver and 1% on gold because I think silver is going to go up more. Just because I think it doesn't mean it's going to be true. You have to have the exact same or very similar position sizing for every single trade and the amount you're going to lose or risk. So if you're going to risk $100, you better make sure that every single trade that you take will have an exact stop loss of $100 loss. So then you're not biasing one trade over another just because you think it's going to do well. You think it's going to not do as well as that other trade. You have no ideas. There's zero knowledge that you have that's going to give you any edge over one single trade. The only edge technical traders have is the ability to carve out profits over a sample size, a series of trades, not 5, like 50. At that point, then you can say you have edge, because over a series of trades, you know you have edge, but on one trade, you have zero fucking clue. And that's something I struggled with initially. I thought, TA looks awesome. Why isn't it going up? Or why isn't it going down? Look at the TA, look at FA, it's fucking phenomenal. But that's not edge. Edge is not, unless you're insider trading, if you're a technical trader, you will not have edge on a single setup. If you're saying gold, silver is going to go up, I have no fucking edge trading that. But if silver does this sort of setup 10, 100, 50 times, I will have edge. I will be able to make money because there will be more times that the price will hit my take profit before it hits my stop loss, or any combination between the risk reward and the win loss putting me in favor of profit. So that's a little bit of psychology. I know it's really easy to get upset with yourself because, especially if you're an isolated trader, it's really hard to gain confidence over the long term, because if you have a losing streak, you will always remember the losers more than your winners. Always. Whenever I think of my winners, I don't get a strong feeling nearly as much compared to my losers. I want, like, my positive trades are greater than my negative trades, but I can feel my negative trades more in me. I can feel the not the hatred, but like the negative emotions I felt when I lost like $1,000 in 30 minutes. Like I felt that and I was like, fuck, I should have done this. God damn it. And that's just life. You learn from it. And now I will always have a wider stop loss for crypto because it skipped my stop loss and it kept on dumping. That's what happened. I lost like fucking like over $1,000 in like 30 minutes. So now I learned. So yeah, I'm just babbling at this point. A lot of psychology, but I really enjoy doing it. I love talking about markets. I really, really am trying to grasp the idea that you should be the kindest to yourself. Because if you're looking at it objectively, being a hard ass on yourself will get a lot of things done, right? Theoretically. If you're going to be working hard, if you're going to put the time in, you got to be like, go, go, go. You can do it. Put the fucking time in. And normal jobs, it worked. It has proven to me that I have been a very competent worker being very hard on myself as an employee. Because when a person says, hey, you got to do this, I will do it to the very best of my abilities as fast as I possibly can to get it done. But in trading, it does not work like that. You can't rush it. You got to understand it's a process. It takes a shit ton of time to actually be able to build the confidence and the skill sets needed to be profitable in this market, which is a shit ton of discipline and even more patience in my view. So it takes time, but I would say that would be a really good way to end off this video. Thanks again. You're always such a great... Yeah, I really appreciate you taking the time to drop in, Christian. If you got any questions, definitely drop them in the comments. I really enjoy doing this stuff. I don't really ramble as much. I'll just go through the global macro update and then just kind of end it there. But I do understand the difficulties of trading. Like, some people think it's easy. I don't really know how. If you've been doing it for years and you're trying to be an institutional trader, meaning you don't have crazy drawdowns, you're trying to be extremely consistent, that's hard, right? You can make a lot of money if you're just over leveraging and you make a good couple trades, you get lucky a little bit, and then you're up like 800% from your account. Yeah, that could happen. But what's your drawdown? What's your max? What's your drawdown? Meaning, how far is the price going against you at a single point in time in terms of the portfolio? So if you have a drawdown that's like 30%, 50%, you're going to have to get like 100% to that original high. So you got to understand percentages. If you drop 50% in value, you got to make up 100% to get to that base even that you initially had. So trying to lower the amount at risk to a mere 1.5%, 1%, and still be able to fund your life and live your life through trading profits, that takes work, right? That takes a lot of capital. You're going to need more than 150, 200 grand in order to do that, in my personal opinion. And it's a freaking climb for sure. But yeah, if you put in the time, if you really want it, if you're willing to suffer the psychological difficulties that come with being a trader, because you will fight yourself. You can't blame your boss, you can't blame the markets, you can't blame your girlfriend, you can't blame anything. 100% on you. Every single responsible thing that needs to be taken in your business is your responsibility. You can't blame anyone. And that's a sense of liberation, because then you're responsible for everything. You can pick what times you trade. You can pick what session to trade. You can pick what pair to trade. You can pick what kind of strategy to use. You can pick what asset class to trade. You have complete control. But with that, you have complete liability. You have the responsibility of an entire business solely on your back. And that's, I think, a responsibility not everyone is open to. Some people like the easy way out, saying my boss is a fucking dickhead, he tells me to do this, I don't want to do it, and just complaining is the easier way to go, instead of like looking at it objectively and saying, okay, I fucked up here. I'm really not as patient as I thought I was. Okay, how do I go about trying to make that better? And that's a skill set that takes a long time, because it's really not easy changing your characteristics. It really is not. I used to be a pretty impulsive guy. I used to be extremely excitable, like very, very excitable, which is great. If you have a present for me or we're going on a trip or something, I'll get super excited. Like, hell yeah, that's fucking awesome. That's great. I can't wait. But that excitement was an extremely negative attribute when I was initially starting to trade, because every single chart I opened up that had a good setup, I'm like, oh my God, this is such a good setup. I can't believe it. It just looks so good. And that excitement was a huge detriment to my trading. And I needed to learn the hard way that I need to be coming into the market with the same mindset, with the same attitude, with the same wavelength, with the same vibe every single day in order to be consistent. I can't have up days where I'm feeling like I'm on top of the world, and I can't have down days where I feel like shit. I got to be waking up the same, similar feeling, same situation every day. And that requires an extremely simple lifestyle. And some people might not like that or don't want to hear it, but traders don't like, well, maybe not everyone, but normally with the traders that I talk to who are over 20 years of experience and are really making some significant capital on a month-to-month basis consistently, a lot of the traders I talk to have very, very simple lives. They don't go traveling every other weekend, going to like crazy shit, going to crazy parties, living like, in a new city every other quarter, and living like the luxury lifestyle and traveling a shit ton, living off a computer, a small little laptop or like a tablet or something. Like the Instagram life of trading is not really, I can't say feasible because it is, but if you really want to get good, you got to have an extremely simple lifestyle. You got to have like kind of the same stuff you do every day. You got to be like a little bit of a homebody. You got to have routine. You got to have a daily kind of like checklist that you do, and just live a simple life. And your excitement, or for me at least, comes a lot from trading, from looking at financial markets, trying to make trades, trying to get myself better. That is extremely exciting for me. That's like the top of the world. Like some people want to go and like do some crazy shit for excitement. This is my excitement. I love mountain biking, but that's like a different sort of excitement. This is like intellectual curiosity, intellectual stimulation that is just super intriguing. And unless you have that mindset, it's pretty hard to bring yourself to learn about the markets every single day. So I'm going to end it off there. Got some really good engagement today. Thank you very much for coming. Really appreciate that, Christian. Also, yeah, you're saying thank you, but I appreciate your engagement, your likes, and just discussion. I really appreciate that. And you do come often, so that is a really good thing as well. So I hope you have a great day. I hope you have a good rest of the trading week. We will be making another global macro update tomorrow, discussing what happened in the markets and just overall discussing what's happening overall. So hopefully you enjoyed it. A little bit of a ramble. I will timestamp videos, or I do timestamp videos, and I'll timestamp this video. So when you are looking back at it, there will be time slots within the description that says, I'm talking about silver here, I'm talking about the S&P here, whatever the case may be. So you can jump wherever section you want to go to, whatever asset you're looking to get a second opinion from, you can find it very easily. So I really appreciate the likes, the engagement. If anyone is watching that has not subscribed, we do provide these weekday daily videos for absolutely free. You can ask for analysis on different assets and all that stuff, and we're very happy to provide it. So thank you very much. We really hope you enjoyed it. If you're looking for a community that has great, welcoming people that are engaging, friendly, kind, and just want the best for everyone, and pretty altruistic, I definitely suggest joining our Discord. Free to join. It has over, I believe, like almost 2,000 members, which is pretty awesome to see. And we can see you there if you have not joined yet. So thank you very much for watching. Really appreciate it. And until next time, have a good one, folks.